I should start off with thanking Jonas and the organizers for inviting me. I also want to thank them for calling me an expert. And finally, I'd like to thank them for letting me go first. So I've taken upon myself, without talking to BioStock, to hopefully stimulate some discussion during these 2 days based on what I say or what I don't say. So I come from Sound BioVentures, a venture investor based in Malmö. I myself, for those of you who don't know me, I'm a product of Lund. That's one of the reasons why I'm here, and one of the reasons why Sound BioVentures is based in Malmö, not in Stockholm. Very important, I think. So this is the team, Sound BioVentures, and apart from myself, all the way to the left, you see Casper sitting down, and in the back, in the middle, Vibash standing up. Those are the 3 founding partners of Sound BioVentures. But we have more investors in our investment team, and Philip, who sits all the way to the right, will be here during these days, and you can have a chance to talk to him. In particular, he's sitting right there, waving. In particular, when we come to something that we're doing experiments with that Philip has been spearheading. So we are a 116 million euro venture fund that specializes in investing in clinical stage therapeutics companies that are private. Already there, I've lost most of you guys, right? But that's what we do, and that's the perspective that I come from when I tell you what's wrong with all of us. But at the same time, I think there are so many fantastic things with this industry, and that's why I'm here in Bitech and today at BioStock. So in terms of what we look for within that very narrow niche, we are relatively agnostic when it comes to which therapeutic area and which modality that we are considering investing in. But at the same time, we're full of pet peeves and pet likes, and with 6 people in the investment team, you can imagine that it becomes a very fine sieve that you have to pass through in order to be able to be considered by us. And what are those properties that leads to an investment is really the theme for how can we as Nordic biotech executives improve the possibilities for us to reach out in the world, be it to find finance or to sell our companies or to sell our products. So this is the portfolio that we built over the 2.5 years that we have been investing. And you can see that we've covered geographically quite well. We set out to do a third of our capital in Scandinavia, a third in the rest of Europe, and a third in the US. We are this week closing the 8th investment, which will be an American investment. I don't know when it will be announced because there are others involved, but soon. But something that's glaring here is that we have not invested in Sweden. That's not for lack of trying. Remember, private is an issue here because in Sweden, the public markets have been open for you guys to raise money, and you can discuss among yourselves if you haven't already formed an opinion about was this good or not, considering that 3 of our biotech companies have bankrupted or liquidated during this year, and we're not done yet because of the public markets being so suppressed, right? But for us as investors in private companies, that's unfortunately taking away half of the opportunities of clinical development stage companies, which is something that we have to mitigate. And one of the mitigations we've done is that we've hired an entrepreneur in residence, Fredrik Lehmann, that is standing up all the way to the right. Fredrik works half-time for us, and his job is to actually start companies based on, for instance, something that gets left over on the shelves in your companies, or that comes out of somebody that bankrupts. But he's also talking to companies that exist around universities in the US, in Asia, as well as large pharma companies that have portfolios that are being culled because they're now starting to fire scientists because they need to make more profit. So this is the 4-leaved clover that we look for when we look for an investment. And as we all know, a 4-leaved clover is a rather rare thing. And all of these areas are areas where we as Nordic biotech companies could be better. The team doesn't have to be a full team, but anyone who has had to recruit management knows that it takes a lot of effort and gambles if you don't know the people, if you can't just call somebody in your stable. So there has to be a nucleus of competent people that ideally have done what it is that you're financing them to do before. And given the fact that CEOs, more than half of all CEOs in biotechs are first-time CEOs, it's of course a challenge to take a bet on somebody. It also has to be compatible with the venture model, something that we'll come back to. But venture investors are usually not investors that invest in a company and then follow the company all the way into the commercialization phase. A venture investor usually backs the creation of data that shows that the innovation is worthwhile. And that is, in our case, a time horizon that we hope would be 4 to 5 years. So it means that whatever you're doing, which is all worthwhile, also has to match us as an investor. Now think about how can we as Nordic companies become better. You have to understand your customer, and we will talk about that a little bit. Then, is it the money round, and is it compatible with us as an investor with 116 million euros? We're not a large investor. We typically invest 6 million euros the first time, and then we have the same amount of money in reserves. But we don't want to invest less than that, because the amount of work we do, being active investors that always take a board seat and work actively with the companies, bringing our expertise, our network, and our connections apart from our money. And that's why some people call venture smart money, as opposed to the public market, where you get families and friends and people who don't understand biotech investing in your company. That isn't smart money. So we want to have a board seat. You typically can be guaranteed that if you have 10% of the company, although that's not written somewhere, you can negotiate other things, but that's something to think about. So that puts restrictions to the valuation and the size of the round that we can participate in. And we can talk more offline about that. And then maybe the most important thing, which is, of course, to solve an unmet medical need. Now, for us, this is a main area where we're thinking about how we as Nordic companies can break through the white noise, or as in this case, the tarmac. And this is why I'm in this business, because of the patients. And if this is not the reason why you're in this business, I think you should think again if you should be in this business. But this is why we're here, right? So, what type of unmet medical needs should we help this patient with if we have limited resources? Which we do, which is evident by the companies that go bankrupt right now. So, the unmet medical need, of course, could be to make it easier for the doctor, to make it easier for the healthcare system or payer to help the patient. But we usually try to start with the patients because we're focused on therapeutics. And if we understand the product in relation to the patient, we can then go on and understand it in relation to the other categories of customers that you have to think about. So let me tell you a story about something that isn't compatible with the venture model, and from the perspective of being a venture investor, was not a good idea, although it was a very good idea from the perspective of the patients. So this is an investment that I did together with Casper Brehm, one of the co-founders of Sound, and Mette Christine Ager, who was the managing partner for Lundbeck BioVentures. This goes back to the birth of Lundbeck BioVentures in 2010. So Lifecycle Pharma was a Danish company that was spun out of Lundbeck that had a technology to formulate drugs in a better way. And Lundbeck didn't want to carry the investment, so they pushed it into the foundation, and the foundation didn't have the competence, so they pushed it into the venture team that was just forming in 2010. So they had this technology, and they were told, you better show what it's useful for, and they made a formulation of tacrolimus, which is an immunosuppressant that you take when you have organs transplanted planted into you to suppress your immune system so that it doesn't as easily reject your organ. And they started out doing this in kidney. They had very good phase 2 data, in particular in a special genetic background, because as it turns out, people that have African genetic background, they have a different set of cytochrome P450s that became important in play with the metabolism of this drug. And if you have that variation, you get severe tremor, and you actually can be restricted from what you can do in your daily life because of that. So a clear improvement for the patients. No pharma was interested in taking over. So the company then reloaded with significant amounts of money from the Lundbeck Foundation and from the Novo Holdings organization. And they generated phase 3 data that were equally good. And no one was interested in taking over the responsibility for marketing the drug. So what did the investors do? Well, they recruited an American CEO that in the US started building a commercial infrastructure. His name was Craig Collard. The company changed name to Veloxis, although it was still traded on the Copenhagen Stock Exchange. And when Craig had gotten to a top line that was $100 million turnover over 12 months, Asahi Kasei said, wait a minute, that's an interesting cash flow that we would like to have. This was a fantastic investment for the financial investors. I can only speak to the portion that the Lundbeck Fund and Venture team owned, but that was a 6 times return on a very large investment. The problem with this is that it took 14 years. And you have to look for the investors that are going to live with you for 14 years. And this company was public halfway through, right? That will have the stamina to back you that long if that's what it takes to make a product. So it's not compatible with the venture model because we have at maximum 10 years. And as I said, we look for 4 to 5 years. Why am I happy to bring this up today, although the slides were done before the business was announced? Asahi Kasei placed a bid on the Swedish biotech company Calliditas for $1.1 billion yesterday. That's an 80% premium to the share price. And it's going to be very good for the Swedish investors to get that money back and put it to use in companies like yours. So you have to think about who your customer is. And if what you want to do is build a company that sells drugs, you need to find the right investors. And it's probably not most venture funds. So one of the things that this discussion about what the unmet medical need leads to is something you should go and talk to Philip about, because Philip has developed this framework for us to think about the impact we have. Not only if we think it's a good idea and if we can make money, but if this has impact. And the impact comes in 2 different flavors. And think risk-adjusted NPV. You can in the same way think about risk-adjusting the change to the quality of life you can give a patient. And as it turns out, for instance, in the investment we've done in the Spanish company Artex that has an mRNA treatment for muscle dystrophy. And if it works, it's going to give those patients 30 more years of life. So you can actually calculate that. Is this very useful? That we're thinking about this investment. We're not there yet that will let this drive our decisions, but I've had this reflection over the last couple of days because on my table right now, I have the opportunity to invest in nail fungus treatment, and I have the opportunity to invest in a rare disease treatment that would make those patients have a normal life. And the business cases are similar. But it would feel better from an impact perspective to make the decision to go with a rare disease treatment. And this is something that is growing in the biotech investment world. You might know that EU regulation demands that all financial actors, be it private equity or be it venture funds, have to report on sustainability measures. And once you start reporting, you will start to be driven to change the sustainability measures, be it carbon emissions or the impact you have on people's quality of life and longevity. So your customers, back to the patient. Most important, you have the public. You have people like us, and this happens to be a group of people that work together in the Knowledge project, which is an attempt to standardize the ESG reporting that companies like you have to do if you have people like this as an investor, so that you only have to do it once rather than to each of the different investors you have. It's growing, and we hope that within a year or two, all significant actors will be part of this. I already told you that the venture capital model is not necessarily to stick with you all the way to the exits, well, to a exit, but all the way to the end of treating people and changing how medicine is done. This is the cynical version. I only wanted to show for you that we are looking for that event that will increase the probability of you having a good innovation and therefore the value of what you're doing. And that's usually what we back. And this, of course, is pharma, which is a very important player for us. And you know that half of pharma's marketed drugs now are coming from people like you, where their fantastic machinery to do full development, manufacturing, and commercialization comes into play. So this graph is very useful to think about where all these actors are. So it's a little complicated. So coming down from the left is the probability of reaching the stage of the development of a drug. And we start at target to hit and end up with commercial. And as you can see, our business is hard, right? And then the darker blue curve is the NPV value of what it is that we are doing and how that grows with the stages. And in the lighter blue is the actual investment that's needed. So the reason why biotech venture investors try to be here is, of course, that for the investment, that's where you get the biggest buck, right? That's where you get that hockey stick. But you have to think about who your customer are, because, of course, there are venture investors that will back you early. And there are venture investors that will help you grow and even commercialize. And maybe we're talking about private equity at that point, right? So you have to understand what the investors that you might be talking to are interested in. But you also have to understand if you're talking to pharma. I mean, as we talked about when it comes to life cycle pharma / Veloxis, no problem picking up the cash flow, right? But if you have, and let's talk about one of the elephants in the room. If you have a women's health innovation, no pharma is going to touch that apart from two. And they don't have a lot of money because they're small, so they will only make a deal every whatever, second, third year. So if you have an early innovation in women's health, there's no offset for that unless you go public and you raise the money from the general public. On the other hand, if you have a phase 3 data set for a women's health product, all pharmas will say, okay, that's interesting, we'll take it. So where you go and innovate, where we in the Nordic countries that have limited resources go and innovate, we have to think about where it's going to end up. And not just say that I have this great finding and what should I do with it, because it might not help you. The valley of death. You've seen this before, the innovation curve. We start off with enthusiasm, then people lose heart, and then you go through the valley of death, the trough of disillusionment. And then somebody sorts out the problems that led you to lose your interest in what was going on, and you build. And you build an interesting business that will help people and will make money. This is the point I'd like to introduce Wayne Gretzky, the greatest ice hockey player ever. He played for Edmonton Oilers most of his career, and that's when he said this. Why are you so good, Wayne? Well, I don't skate to where the puck is. I skate to where the puck is going to be. So here we have Wayne with the Edmonton Oilers jersey on. And he's looking for when it's time to invest. And from my perspective, which could be very different from yours, you don't just invest where the puck is if the puck is in the hype phase. You invest when it's time for the area to mature. As an example, this is why I asked you, Mika, you don't invest in AI and drug discovery now, it's going to do our work for us. But now is not the time, because it's still not useful. And if you invest, you only invest so that public investors take it over from you and they lose their money. Eventually, it's going to run me and all of us. Gene editing to treat diseases, it was at that stage, and several large European venture investors made a lot of money by hyping something, putting on the public stock exchange, and everyone wanted to be in gene editing, and they exited. And everyone is sitting with this in their lap. It's now starting to be useful. We are seeing drugs that actually come out on the market that is using gene editing. Maybe this is getting to the point where you should think about investing. Do not go after incretins, okay? Invest in the companies that have them already. Don't go after them, because we don't need 9 marketed checkpoint inhibitors and 45 in phase 3 clinical trials. That's not where our money should go. The money we have should go to the best of you guys, not to be the 10th drug on the market. And the GLP-1s, yes, they're going to sell for $50 to $75 million, according to something that, sorry, $1 billion, according to something that came out today. Don't go there. But obesity is becoming a mature area. Why don't you go after targets that will reduce the loss of muscle mass that you see with the incretins, or targets that don't only reduce appetite but actually increase energy expenditure without causing any other havoc in your system? We're getting there. And here, the companies that have the GLP-1s and the GIPs, or the dual drugs, they will buy you when you're preclinical, as we've seen Novo Nordisk do over the last year. We, of course, as an investor, we try to be here. It's not always the case, but that's our dogma, right? Now, I told you I'm in this business, and you should be because of the patient, but of course, somebody's paying me to be in this business, and if money wasn't important, it wouldn't be possible. Have you ever looked at the back of a dollar bill? Yeah, think about that when you think about the election. In God we trust, but we know everyone else needs to bring data. And here I think we have much to do in the Nordics to think about what type of data can we afford to generate, because this is the problem. Since everyone is investing in checkpoint inhibitors, they should be and will be investing in GLP-1s. They should be investing in us being able to generate better data in our Nordic companies so that we can convince other people that this is such a good idea as we already know, right? And then we come to what I think singles us out here in the Nordics, our lack of storytelling. I think you know what I mean, but let me give you an example. I had a Nordic CEO say to me the other week, we screwed up. We're 9 months delayed. If you give us $5 million, we can catch up. And we'll save the 9 months of delay we will have otherwise. If this had been an American CEO, he had said, I have a great opportunity for you. If you invest $5 million in us, I can accelerate my program with 9 months. It's the same information. Was it important that they screwed up? Yes. You'll find it in due diligence. You'll make an assessment of, is this actually making me less interested in investing in this company? After all, I can accelerate the program if I put 5 million in there. True story, right? So we are scientists, many of us that come into this industry, and many of you in the room. And it's very important that we're always truthful, right? And that's also the case in the business of science. But you can think about how you tell the story. And that's something that we're not very good at, because we have this, the jantelagen. And if you're not familiar with it, it basically says that you're worth nothing, and whatever you do, I'm not interested because I'm equally important as you, but I'm not very important either. Now, the Anglo-Saxon world, which is our main competitor, I think, when it comes to storytelling, they have this. I mean, they start with show and tell in kindergarten. But this is a debate club, and looking at the uniforms, it's probably in the UK. And if you can read what it says, they're going to debate if more money should be put into space agencies. How old are they? Maybe 11, 12? Isn't that fantastic? I wish I had that. No. Instead, fear of standing up in front of people, having to give a speech. You probably remember Annika Sörenstam, who actually on purpose did not win in the beginning because she did not want to stand up and give the thank you acceptance speech of having won the golf tournaments that she started competing in. So here's something that we as a society have to do something else if we are going to be more successful. Because yes, everyone will do due diligence on you and they will find all the truths. But in order to get them to invest that, you need to be able to sell your story in a correct but also inviting way. So 2 more slides. The customer is always right. Don't argue with the customer. You will gain nothing by that. But you can always walk away and ignore the customer. But I hate CEOs that when I say, my opinion is that this is not for us because of this or this or this. And then they start arguing with me about that. And I just said, well, it's my opinion. You can't argue with my opinion. And I think you should meet the world confident that you have a great thing. And if people starting tjafsa with you, then just ignore them. And then, because I want to stimulate discussions, I am of the opinion that one of the main reasons why the Swedish biotech companies are not as successful as they could be, it's because of the teacher's exemption. And those of you that are professors and entrepreneurs in the room, you are exempted, but everyone else is sitting on their science because they don't know what to do with it. And if they had more professional tech transfer offices that would be more professional, if they got more of the profits and they could invest in being professional, they would help you. And they would make this science reach the patient, which is why we started talking about this in the first place. And then, of course, you can always work harder. Okay, my time is almost out. Thank you.